The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. And if you were listening to us in the last segment, you will not be getting the down payment assistance program, the equity share from Cal HFA, because it's bad for you. Just my opinion, but I'm right. So every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. What did the loans do yesterday? Remember, no APRs here, and we don't know how many points were paid or received to get these rates. OBMMI, they just provide the locked interest rates from yesterday. And being they've got 35% market share, it's a pretty good barometer. Conforming 6.475, 30-year jumbo 6.609, 30-year FHA 6.365, the 30-year USDA loan, which generally has no down payment and no mortgage, no down payment, and it's a rural area. Sorry, is on that one. 6.359, and the best loan on the market for those that earned it. That would be the 30-year VA loan. 6.14. Every one of the loans yesterday, the rates were down over the previous day. Well, it all has to do with Jerome Powell. And if you missed my opening riff, sorry, but I did explain a little bit of that. We'll get into a little bit more. 10-year Treasury right now is down 1 basis point at 3.436. S&P 500 is up 56.71. Mortgage-backed securities, they're up 30 more basis points today. And that's good news because remember, when the bond goes up, rates go down. And why are they going down? Well, because of Jerome Powell. He wants to increase interest rates, but he only controls the Fed funds rate. And everybody else knows the market's going to have problems. Where do people put their money when the market has problems? They go into safety. That would be the 10-year Treasury, mortgage-backed securities. So here's a few thoughts from that statement. Job gains have picked up. Unemployment remains low. When do recessions start? When unemployment is low. Inflation remains elevated. The banking system is sound and resilient.
Nothing like a little air superiority.
Janet Yellen said that the day before Silicon Valley Bank went out. Does that make sense? Recent developments will result in tighter credit conditions and weigh on economic activity, hiring, and inflation. The committee anticipates some additional policy firming may be appropriate. And this is, here's the big lie. So they're going to continue quantitative tightening. Mr. Powell, when you go from $6 billion of purchases to $153 billion of purchases, that's called easing. That's not tightening. But he doesn't realize that. I guess maybe he didn't know what the Federal Reserve was doing. I don't understand. Or maybe he doesn't want you to know, but you listen to Ron Siegel Radio, so you get that information. Projections were largely a non-event as they did not change much for the end of 2023. GDP 0.4% from 0.5. Core PCE 3.6% from 3.5. No cuts in 2023. Anybody want to put a nice wager on that one? When the economy starts tanking enough, the Federal Reserve will cut rates this year. Again, my opinion, and I'm right. There's a lot more to this, but it just makes me ill. The new home sales measures signed contracts on new homes rose 1.1% in February to 640,000 unit annualized pace, which was stronger than estimates of a 3% decline. Missed it just a little bit. While this looks positive, there was a big negative revision to January's number, which was revised lower from 670,000 to 633,000. Still positive to see a rise in February, even though rates moved higher. Year-over-year sales are down 1.9, are not down 19%. My screen's a little dirty there. There are 436,000 new homes for sale at the end of February, and at the current pace of sales, there's an 8.2-month supply. However, only 72,000 or 16.5% are completed. So if you want a roof over your head, then there's not enough for you. If you don't want the roof over your head, then there's a lot more you can buy. Just throw that out there. Huge jump in homes sold, not started. Okay, which means they're selling Tents. I guess that's what you can move into a tent or something. Initial jobless claims measures individuals filing unemployment benefits for the very first time were nearly unchanged from the previous week, 191,000. That's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990.